Hi, my name's Andrew Rowland, and I'm the VP and a principal alongside my father Pete at Kona Development Partners. We've been helping investors and buyers take advantage of the awesome upside potential of destination and oceanfront real estate for nearly 40 years, but not quite how you think. Our clients come from different walks of life from all over the country and some from even outside of the U.S. In their professional capacity, they may be top-level executives, skilled tradesmen, farmers, or business owners. They work from the tech campuses of Silicon Valley, the skyscrapers of New York City, the farms and ranches of Middle America, or in the many Main Street small businesses throughout the country that service the public every day. But there are specific things that they all have in common. They're very successful people that have taken risk. They've created jobs, they've applied their talents, and they've worked hard. As a result, they earn extra income that they consider discretionary investment capital. They understand the importance of growing that capital so they can further secure their future, enjoy life to a greater degree, help people that they love and causes they care about, and potentially create generational wealth from which their children and their grandchildren can benefit. And they come to us because we provide them the opportunity to participate in oceanfront real estate development projects in a way that's usually reserved for institutional investors and the ultra-wealthy. It's during these early development stages that partnerships and equity positions can be secured to allow you to fully realize the full upside potential of this incredible asset class. Our clients want the obvious benefits of real estate ownership: protection of capital, strong long-term growth of capital, depreciation write-offs, access to lower capital gains tax rates, isolation from stock market volatility, and the peace of mind that comes with being invested in a real tangible asset that historically maintains value and demand regardless of economic disturbances. Our clients do not want to be personally exposed to the potential recourse of acquisition and construction loans, the difficulties of negotiating with contractors and subcontractors, the liability associated with building. They do not want to be subject to the volatility of the stock market, and they don't want to spend their valuable time and money dealing with the ridiculous regulatory and legal matters that can be avoided by making passive real estate investments. Speaking about time and its value, if you're like me, much of your success has been a result of you devoting a large amount of your time to your professional pursuits and your business. I know that the older that I get, with each and every 50 to 70 hour work week I devote to business, the more and more valuable my time becomes to me. Because time is something that once it's gone, you can never get it back. Now, I know that most of you feel the same way, so why should you take the little bit of time you have outside of your own business and use it to get involved in complicated and risky real estate investments that will demand all of your personal time? You shouldn't. And that time should be spent instead enjoying life with your friends and your family. The point is, there isn't a better way to potentially realize big returns while simultaneously protecting against downside risk than investing in oceanfront and ocean view real estate. And when an opportunity comes along for you to be able to secure an early ownership position that is normally reserved for industry insiders, it at minimum demands your attention and quite possibly your action as well. Now, my very first memories of life were on my father's real estate development projects. He was building what would become 6 of the most successful oceanfront properties on the Outer Banks of North Carolina at the time. Each one was a ground-up oceanfront development not far from where the Wright brothers first took flight. By the age of 2, I was climbing 20-foot tall ladders. By the time I was 3, I had snuck into a cargo van that was parked on an incline and proceeded to crash it into a bulldozer. Later that year, I was the first one to take a dip in one of our brand new swimming pools, even though I couldn't yet swim. And by the age of 4, I took a 50-foot tumble down an Outer Banks sand dune. Come to think of it, it's amazing that I'm still here today to be able to speak to you now. Now, I assure you, as I grew older, I stopped causing trouble in our real estate projects, and I began to become an integral part of the business. As a teen, I was doing legwork in the complex marketing programs we conducted conducted. In my early 20s, I was working in the cutthroat and highly competitive market of Las Vegas. By my mid-20s, I was managing multiple departments and a team of nearly 50 employees on one of our hospitality projects on the Pacific coast of Mexico. Post-2008, we learned the dangers of using debt and leverage and the pitfalls of being dependent on capital markets in general. And here we are today, nearly 40 years after my first memories of life on those North Carolina projects, and my father and I are still developing oceanfront real estate together. The vast majority of experience and knowledge gained from 35 different projects throughout North America and the South Pacific have given us the ability to continuously refine our capital structure and our business model. That capital structure and business model today is one that allows us and our investors to protect capital in the short term, have strong growth potential of capital in the long term, maintain the benefits of real estate ownership, and in our opinion, significantly de-risk the investment by eliminating the use of senior debt and institutional partners, all while preserving the full upside potential of the investment. Now, in parting, I'd like to share with you an important insight regarding debt or leverage and dependency on capital markets and institutional investors. Real estate investing models and capital structures should be built to weather the storms that can and will come in financial markets and the overall economy. High levels of senior debt or leverage put all of our investment dollars at risk. Our capital structure avoids all senior debt while preserving the full upside potential of the investment. You should be equally cautious of any projections that require a large-scale refinance event to occur during the investment cycle. This is often done to falsely inflate the IRR or internal rate of return projection. Not only does refinancing put the project further into the debt and therefore increase your exposure to risk, but should capital markets not be flowing at the point in which the refinancing has been planned, your projected returns will be significantly affected. So whether you invest with us or if you invest with someone else, when you're evaluating any type of investment, you must understand that leverage could potentially be the death nail to your investment should economic conditions change and that debt becomes unserviceable. By simply missing one payment, it could all be over. In closing, I'd like to thank you for taking the time to watch this video and learn a little bit more about my past and our future. I can truly say that I've never been as excited or confident about a project as I am right now. So if you enjoyed watching this video, if you found it helpful, please feel free to share it with others, your friends, your family, and click the link below so that we can set up a time for us to speak with each other one-on-one. I appreciate your interest. Thank you. Have a great day.